Alrighty. Doc here from North America. Good morning, good afternoon, and good evening. And for those who've gotten blacked out there for the last couple of hours, I bet that's a drag, hey? Trading in Germany's main index, DAX, various and other European cash and futures exchanges was halted for nearly 3 hours on Wednesday due to a technical issue at a German electronic trading platform, Zetra. All right. So, what do we got going on here today? Let's see now. We've got that's the euro there, and obviously, not that we're not. We find this. We have the same problems over here every so often. Not 3 hours, but anything's possible. Well, no, I don't know. I'm sure we've had a 3 hour breakdown here somewhere, but anyhow, that's the way it rolls there. So this is Doc, and we're going to try to take a look at the markets today. It's the summertime, summertime, summertime. It's kind of we're kind of tired, kind of want to get off the roller coaster and just kind of be. But right now, we're looking at the markets, and so we should find something interesting to discuss about them. So here's the euro. There's the fact check sheet, or the Excel fact check sheet, and. Not much more to be said about any of that, really. We'll just look at all the products unless someone has a question, and we're always hoping for a question because every question seems to lead to better trades somewhere. At least that's the way I find it. I do find better trades. I find new ideas. We found the GBP JPY one from a question. We found the Euro AUD from a question. We found the NAS CAD from a question. We found many different pairs trades that are fascinating to follow. It was probably the Turkish lira was probably one. Someone probably said to me, "Hey, Doc, what do you think of the Turkish lira?" At the time, I probably said, "I don't know, no idea." And then we started following it because of that. I remember one time we saw the industrial production of each of the European Union states or countries, or however you want to phrase them. And all of a sudden, Poland, which is only like, a teeny weeny little size of France, became tied with France in industrial production. So we started following the Zloty, the euro against the Zloty. It's, and what a product that's been, just locked in the threes and the fours and just hanging there and just very solid. So you never know what can come from a question. So don't be afraid to ask. It's okay. Don't be scared. All right. I don't bite. I nibble, but I don't bite. All right, so let's take a look at the euro this morning. You can see it there. There's the J4X. You can see it. It is 112 at 06. 07s are offered. Very nice tight market. Must be very solid and quiet. You can see right there it's a little down day going on there. On line 14, we are 6 whole weeks now on a weekly buy. And if you can, count, 6 times 7 is 42, or 6 times 5 is 35, either way. You count 35 of these bars back. Is it lower back there and higher up here? If so, Doc's math is doing its job. And then on a daily basis, right there, it says 4 days in a daily sell. And so you count back 5 full days. So we started there. So 1, a 2, a 3, a 4, and today is the 5th. And are we lower than where it started from the day before there, like that right there, to close off? And yes, it is. Not by much, of course, but it is lower. And if we take J4X and we make it bigger like that, you can say, wow, look at that big slide. Make it like that. Wow, look at that giant slide. But not really. And so you can see here that the product is just kind of stumbling along because it's the summertime. People are trying to cash in on some warm weather and sunshine and blue skies, and just move away from the other times. Hey, Robin, how you doing? How about that? Europe got knocked out there for a while in the Zetra. Good old Zetra DAX. They're electronic trading. Any news? Anything cooking? Get any emails? Anything good, bad, or indifferent? Z. I love that. Z Top. Hi, how you doing? I like ZZ Top. That band is pretty cool. I love the beards and I like the old car. They kick it, Good old ZZZZ ZZZ. ZZZZ top. All right. I'm glad you said hi. That's good enough for me. You don't have to even ask a question. As long as you say hi or say something. You know, move me away from me. You say something like ZZZZZ, what do? I drift away from my crazy automatically and right back to civil, you know, the reality world, I guess. So anyway, so there's the euro. You can see here on the Chicago Quant side of it, right there. You can see it's trying to roll over, just like the white line is trying to roll over there. You can see we have been. This is the weekly buys right there. Bing, 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 and this is the daily sells. Bing, 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 bing. Where's the daily sell? Daily sells 4, so it's in here somewhere, right there. And we'll take that and make that red, like that. And then why it did not go into a buy there, with the white line and histogram being plus, was because of the red and green dots. So we have to wait to the next day. And what did the next day do to us right here now? Drive underneath and go into the red dot. And what did it do? It gave the line a chance to go down. And so that's why we are still in a daily sell from where the little red line is, from the close of here. So, and that was green, and that was plus. And then right there is the negative, and you can see it's gone up, and it's gone down, and probably gone, might have gone actually up about a little bit more than it's gone down, but it is still down in the end result. And it's also a neutral position in our trading, because why? Why? Because we're 6 weeks in a weekly buy right there, and 4 days in a daily sell, which means neutral. So it means that if you were long, you know, like when it came up into here, and we went into our sell number right there, means to take a profit but not go short, because it's in a weekly buy. And then it zip-diddy-doo-dod right to, let's find another line. Let's throw another line in here. Then it went into a buy. I guess you could say it was right there, because again we had the red and green dot, and the next day started to lift up, and you knew you could buy it early in the morning, you know, in European time even, and catch some of this wave for a couple days, because it was in a weekly buy. But you can't take shorts. You can only take profits on the sells of this system, because why? We're in a weekly buy. And so when we go into a weekly sell and then you get into a sell, then you can go short. And that's how that works. All right. Now, let's take a look at cable, unless someone has something they would like to look at. If there's any product out there anybody wants us to look at, shout it out. We'll go look at it. No questions asked. And like I said, we don't bite. We just nibble. And there's cable. Let's see what cable to DocDow is doing there. That's 5 weeks in a weekly buy and 4 days in a daily sell. I guess we could go like that. There you go. So it emphasizes the 4. That's the sell there, right? See? Sell, buy, weekly sell, weekly buy. Ooh, see? That's how we follow it. That's the fact check sheet. Dun, da, da, da. All right, now cable, look at that. It's trying to lift its little head up. And you would have thought maybe we would have got into the buy there. So let's go take a look at that through the Chicago Quant. Well, it was right on the edge there. And look at it. It's playing with that red and green dot gig right there. You see that? And it's trying to get into the buy. And look at this. The weekly is trying to roll over at the same time. So, ZZZZ top. Hey, baby. Let's see, Doc, can you please explain a bit about the momentum and the direction indicators, including the stochastics? On J4X, are you talking about? That's what you're looking at on J4X. J4X, we're looking at, there's a slow stochastic, and then the white line is a fast stochastic. And the leading is about the momentum and direction indicator. Okay, and then the dark bluish purple line there is the rate of change. And we put those together to try to emulate my work here. And here is my math as line 3. It at times can emulate it very well, and we use the 0 line for long and short, whereas these products here use the basically the top and the bottom of the range. And so um, we put this on J4X because it does. J4X is fun to be able to do that. Be able to see a lot. And at the same time, we can't get our proprietary math put on there because we don't do that. But what we do is we emulate some of the characteristics of it by using two stochastics against each other. And I guess it's a rate of change concept. So yeah, sure, generic, exactly. And so it has that. What's the best way to describe that? I guess it has the flavor of my math because I use a stochastics to smooth out my mathematics itself. And I guess there's a movie out there. I know I'm going to drift a little bit out there. It's a movie with about football. It's about, I don't know, 15, 20 years old, maybe 12 years old, something like that. I don't know. It's been out there a long time. And what the movie does is it talks about there's a the coach. It's like this fictitious team. It's called the Miami Sharks, and I can't think of the guy who played Serpico, and played in those mob movies for Godfather. He plays the coach, and there's a point there where he's giving a pep talk about inches or centimeters, or just in enormously small increments. Okay, and he says, just a step slower or a step faster, just a half an inch, a quarter inch, just a miss of that much can mean a touchdown. Just imagine, you have these 300-pound, I don't know, 170, kilo or 130 kilo players, right? I mean, these big, giant people and physical people and incredibly fast people. And he's lecturing that just one little quarter of a centimeter, just something so small when they're just colliding into each other and they're playing on 100 yards by like 50 yards or 60 yards wide, And that's exactly what the difference is. I have a formula. I smooth it out with a couple different tools. And on J4X, we're using some of those tools that we smooth it out with. So it has a flavor of my math. But the difference can be a world difference. It can be just as far away as Mars. In other words, it's great to use this. And if you can't use my math more than just 1 hour a day, then if you're going to use like J4X or any of these other platforms, use this math. It will at least give you the flavor of what's going on. It gives you the flavor of my math. Now, it's probably like, 50, 60% accurate, 70%. I don't think it's 70, but it's 60. You can see some of the contests that I've won for Dukascopy, or come in like, second and third and so forth, and using some of this math, the generic one. And, put together, it can be very accurate. So it's a really good tool to use two crossing a slow and a fast stochastics. And then using something which allegedly, if you notice, the rate of change is supposedly a leading indicator. And when you take two stochastics, which are supposedly lagging indicators in the dictionary of technical analysis, that is probably the best way to describe it all. Now, ZZ, I hope that really makes some sense to you. I hope it at least, and if it doesn't, you can ask something else about it. I can try to help you out, or not help you out, but to try to, give you a little bit more of the flavor, the taste of it, and that's probably about the best way to try to describe it. So I hope that helped out. We'll I'll wait for your yes, no, or maybe. So anyway, we're just going to keep on rolling along here. But that's the name of the game there. And so then when we go and we reconfirm or confirm, like you can see here, here's the fast moving stochastic. You can see at the same time ours turned up just as well. Now in this case here, it's trying to go into the buy. In this case here, you're at the low end of the range. Now, just because you're at the low end of the range doesn't necessarily mean that you would invest in that. In this case here, you might want to actually, because our math, when you go over to the fact check sheet, we are in a weekly buy. Oop, I don't know why it does that upload thing. We are in a weekly buy, if we can get back to that on line 14. Come on, go away. Shoo. Shoo. There we go. Shoo. There we are. And so you can see here, we are in a weekly buy. It's been saying that we've been in a trend, back here, back in late May. Okay, so there's, late May. You can see this is definitely, this point here in late May is definitely lower than here, or even here, really. And so the math picked up on it. Now, it went into the low right here, and it started to lift up, but we were in a weekly sell at that point. So you could say, oh wow, Doc, you're bouncing, and I probably bounced just as well too. But the problem is that I was in a sell back in here. I was in a buy up into here, and then we went into the sell into here. So it wasn't all clear, be long, that type of thing, And so that's the difference. I hope that, and it, using the J4X and taking a look at the fast and slow moving stochastics helps out. So, alrighty. Let's see. Right there now. Now, what do we have? What else do we have to say about the cable? Looking firmer, I think, than the euro. That's the interesting point. You can see here that's a plussy, right? That candle, it's going up, obviously, and it's higher than yesterday's settlement. And then here, you can see this is a negative candle and lower than yesterday's settlement. So we're seeing some strength in the cable today, whereas in the euro is not seeing that. So, all right. Now where are we? Let's see. Where do we go from here? We usually go over to Turkish lira because it's just fun to watch. It's been strange lately. Really strange. Look at this. Look at that. Look at this flat line that's going on here. Even when you bring it close, it's flat. What has happened? Did they go on holiday for like the last 3 weeks over there, or what? Is Turkey on lockdown holiday, where everybody's just saying, you know what? I think we'll come back in September, and we'll get involved then. Look at that lockdown. It's very suspicious. I guess that's the best way to describe that. And you can see where the you can see where the J4X, the white and the slow and fast stochastics are kind of locked at the top end of the range. Now let's take a look at that in Chicago Quant, our Chicago Quant gig. And it's doing pretty much the same thing, and it really screams too. Look at that. All those green dots. We went into a daily sell right here. That was funny with no dot. And then the next day, right back into the buy and a dot again. But look at the tight of that range. Is that robust mathematics or what? Looks like it to me. It look like it to me. And so very robust. In this case here, very sleepy. If they've declared like a national holiday for the last 3 weeks, let me know. Maybe they're on walkabout. Everybody in the country has gone walkabout. I hope they're enjoying themselves. Let's see. So that's a Turkish lira, and it's been fun to watch. All right, now we're going to go to Canada. Oh, Canada. Now, Canada went into a daily sell there yesterday. Let's see. Let's put it up there. Also, the crazy of crazies, just for that Turkish lira. Have we found something to follow that's fascinating? Yeah, look at that. 30 weeks in a weekly buy and 5 days in a daily buy. Is that nuts or what? Wow. Crazy stuff there. Crazy stuff. All right. Now there's Canada. It broke down yesterday, if you want to call that broke down. I mean, look at it. It's really just inside the trading range there. Um, what else can there be said about that? You can see a couple red dots there. You see the Chicago quant pushing down a little bit more today than yesterday. I guess we need to find a little red dotted line there. Let's see if we can do that. Right there. Do 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 do. Wow, wow, quiet action. And it's been in a weekly sell since here. It's the summertime. Trudeau might be on holiday, so he's not doing anything too insane to freak everybody out. He's a character. He's odd for a boxer, I can say that much. All right. So there's Canada, and you can see here on the J4X, it's at the top end of the range trying to roll over. And so we'll see how far. Oh, there we go. Yeah, the micro level of each of these candles, what would be the relationship between the high, low, close, open, etc. in a bearish and bullish trends? Now, that's a good question. I've always been fascinated by candlesticks. I like Darcy Wright, also the X's and O's. And good question there. Good statement there, Robin. You know, the high, low, and close. I think candlesticks in general are just more visual. We can go into a buy with a negative one. We can go into a buy and a positive one, depending on our internal mathematics. I on my charts on my Chicago quant, you notice they're open, high, low closes instead, and my dots take care of the rest. It's hard to say. Basically. You can see here where we have red dots and the candles are plus. You can see here it finally breaks down, and we have all these negatives, red dots, and this throws a little plus in there in the middle of it all, and so forth. Candlesticks are just visual. They're a very old tool. I think some of their characteristics are really fascinating. When I was young, I used to talk to Nissan every so often from Merrill Lynch. John Bollinger used to try to push us together because Nissan had studied candlesticks in Japan for Merrill Lynch, and he really had a hard time utilizing them in America. And so John said, you seem to have something close to candlesticks, but they're not really candlesticks. Maybe you can help Nissan out, And so I talked to him once in a while, and he was part of the Market Technicians Association and so forth. But never really took it too far because there was never really any deep conversation about it with him. I mean, we tried. I just didn't find him that. Let's just say it just didn't seem to match up. But in the end result is candlesticks are very visual. I think they're really good there. The open, high, low, and close, just looking at all four dimensions is always nice. I think it's very important to be able to see all four dimensions. I do something called green dots up and down, which defines the height and the high and the lows, and relative to other highs and lows, and that can be very insightful. Matter of fact, let me show you one of those. I think. Do I have it on here? Let's see. I want to show you something. I follow the Dow that way. Day chart, maybe. Let's see if day chart has it. There it is, right there. And what I do is I define these lines through the highs and the lows, and I emphasize them with the dark or the green open, high, low closes. And they've been very insightful for, I don't know, I back tested them about 80, 90 years, and I think it was 90 some odd years. And then I've used them for 40 some odd years. And the trend lines from them seem to have some interesting insight on the open, high, low, and close, especially the low and the high. It's much more insightful. So each one of those components can give you something. I guess the question is, what you're looking for in the end. And so that's what I'm talking about there. I'm not sure. I think we've drifted from my idea, but in the end result is that just very visual. People asked for it on the webinar, so I put it up there on there. But I don't really follow it that much because I use all my math here to take care of that for me. So there we go. All right, let's drift over to the Swiss, unless anybody out there has a desire to see any particular product in Doc's mathematical universe. I hope that answered part of the bearish trends. Yeah, I hope that answered some of it. Let's put it this way. If you see down candles, obviously it's going down. And vice versa. If you see positive candles, obviously it's going up in value. I mean, that's just, I think it goes up there with that bank robber back in the 1930s, John Dillinger, when they said, "Why do you rob banks?" He said, "Because that's where they keep the money." So, I mean, it's pretty much the candlesticks are, why do you watch candlesticks? It's because they show you when it's going up and down, and you're trying to figure out when it's going up and down. So it's a good way of doing it. I just don't need it for my work. That's what Chicago Quant Technology is all about. All right. Let's see, where are we at there? I hope that answered it. Now we're looking at the dollar Swiss. Wow, look at that. They're just like the rate of change is trying to go up. The fast moving stochastic's trying to move down. The slow stochastic is trying to move up. So these two guys are laggards to the fast one right there. And let's see what it looks like. Look-alike in this. Let's see. There's dollar Swiss. Now our white line is moving up with down candles, or down dots, I guess you could call it. And you see that it's trying to turn up and trying to get back into a buy. You can see here we've been in a weekly sell since here. And all those red dotty dots at the same time don't hurt, that's for sure. So, let's see, what else can we say about the Swiss besides the fact that it's the summertime? Now, no doubt, the Swiss has made an interesting move. It's gone from the 98s just over the last month and a half, almost two. Now, I guess you can say it's 2 full months. It's gone from the 98 area down to the 94 area. So that's a pretty good move. Now, at the same time, the world markets have recuperated on some level. Be it I showed on one of the webinars where the National Bank of Switzerland, their central bank, is long, billions and billions and billions and billions of dollars in the Nasdaq 100, or as Dukascopy has it labeled as the let's see, where is it at? Let's put it on here. The right there, they call it the U.S. Tech 100. That's the Nasdaq 100, and it's an all-time highs, has made all-time highs, and the Swiss have been brilliant enough to buy the daylights out of it when it was crashing. So they've made good money there again. In a world now where central banks are participants in everyday markets, they are doing the best they can to invest correctly. And at the same time, I guess as the dollar, I guess the value of the Swiss, there's less Swiss saltine to the dollar, which means that's going up in value, right? So in other words, if it got down to 90, there's only 90 or 0.90 saltine to a dollar, then that means that it's becoming more expensive. Is it more expensive? You get less saltine, right? So it's more expensive for foreigners. So obviously they're, extremely good investing, and their responsibility level of parking capital in a safe haven is being rewarded in our currency. I think that's kind of nice and interesting. And you can see there the action we're seeing in the stock market there this morning. You can see in the candlestick it's obviously higher than yesterday. That's probably the best thing about candlesticks. You just quickly look at the color and you know it's higher than yesterday or something like that most of the time. Most of the time. And so that's where we are with that. And that's pretty impressive. They had like, I don't know, 50 some odd billion dollars worth of this stuff. 50 billion. I showed the portfolio on here a few times. I thought that was brilliant. One Saturday night they had published something really interesting, and I went to it and started exploring it. So we brought it into the webinar for a couple of days that week. I think I probably labeled it that way about 2 or 3 months ago. 2 months ago, maybe, something like that. So, all right. Let's see what's next. What is next? Let's go back to the currencies and take a look at the yen. Boy, there's a good one, isn't it? So that's the rand against the yen. I got to look at that just for the sake of that. That's a nice number. So there's what, 6 rand to a yen? That's pretty cool. Look how flatlined that is. Coming off of its lows, though. Huh. All right, let's look at dollar yen. Right there. Same pattern. You can see it's the J4X is showing that it's kind of at the top of the range. Where are we in that thing? I think it's in a weekly sell, right? We go to the dun dun dun, the fact check sheet, right there. Dun dun dun. And let's see, where are we in that thing? Right there, line 19. 2 weeks in a sell, 6 days in a buy. So obviously in the daily, if you count back 6 days, we've been in the right trend. When you count back 2 weeks, which would be like 3, and then 1, 2, 3, 4, 5. Then 1, 2, 3, 4, and a 5. So I guess went into the weekly sell inside this slide here. And at one point we were down, but not anymore. We went into the daily buy down in here, and it went back up. And obviously we're in a weekly sell and a daily buy. Means it's a neutral because we know that the product is going up in value on a day-to-day basis. And sure enough, it has and did. So that's how you read the spreadsheet. The dun dun dun. The fact check sheet. Yes, indeed. All right. No more questions out there. Oh, darn. I like questions. Any questions? How about a non-standard continuing QFT and variation under only? Yes, indeed. Okay, make the treatment. Let's see, Robin. Doc offers to. Oh, that's nice. Yeah, see, stir me up. I like that. Let's see. I mean, a quarter of the reason that was created is people actually send me texts from Dukascopy, and I go, like, can you just give me the weekly buy of this and the daily sell of that? And it's like, you know what? There's the site. Go to the site, and it's even easier and much more informative than me just throwing the numbers out there. Because it's good to be able to see these charts. It tells you the weekly and daily trends. You can just count it yourself. I don't even have to show you anything. Let's see. All right, so that's the yen. So I guess, and let's take a look at the yen in the quant side of it. Dun dun dun. There was the Swissy. Now here's the yen. Dun dun dun. And so you can see the strength from there. There's the buy. You can see the weekly sell is at the close of that. So that's not fun. I mean, it was in here right there, and it did go down, but it's not fun. Now look at all those nice cute little green dots. Oh, what's Witten asking? the world's #1 mathematician is in the background. Oh God, this is like an in-house thing. Sieber is talking to Witten, and Witten is talking to Juan. Oh my God, they're all just like the IAS is all over the bloody world. IAS rules. Institute of Advanced Studies. All right, let's see. Where else are we at this point? Okay, so that's about it about the yen. And when you look at it on J4X, it's been, all this stuff is really, if it wasn't for the virus, we'd be really have nothing. This market would be really tight. Thank goodness we had these crazy wild V's in the middle of it all from the virus. Oh, here we go. Let's see. So would it be correct to assume that in bearish trends, the close will be farther away from high and open? In a bearish trend, let's see, let's try that again. So in a bearish trends, the close will be further away from high and open. Robin used to say something like that. Robin used to say that. He used to say that. Robin used to say that to me. He said, "Oh my God, look how far away the buy number is, and we're in a sell." And that means really bearish. So yeah, I guess I would say yes to that. So let's just read it one more time. Let's see. So we can assume, it is correct to assume that in a bearish trend, the close will be further away from the high and the open. Yeah, I think that's a good way of looking at it. On a very, I don't want to call it a superficial level, but on a simple level, more than a superficial, a simple level of interpreting it. Yeah, I think so. And I credit Robin for spotting that decades ago. He used to say that to me. He'd say, look at that. Look where the damn buy number is. It's so far away. And I'd be like, yeah. And he goes, but that's really bearish now. And sure enough, it would really roll over even more. So, yeah, Robin confirmed that. I don't know, Robin, what's that, 15 years ago? Something like that? You confirmed that? How about the lowest? You mean like in the reverse of that? Yeah, I'd go with that again, yeah. So in other words, if you saw it doing the reverse on the upside, definitely. Because Robin confirmed that one too about 15 years ago. Which is really cool, having independent professional traders eyeball stuff and see the utility of it. Yeah, at least 15 years ago. It could have been 20 years ago at this point. Yeah. Because I know I've quoted it a long time to a lot of people that asked me that same type of question with ZZ. And ZZZ, basically, some of the pros out there on Wall Street have asked me that question. So, oh, what's this? Oh my God. I've got Strings 2020 on right now. It's live coming out of Cape Town, and all the physicists and all the string physicists and mathematicians are grooving. And somebody just, it's all Zoomish, So someone just asked a question, and they got their picture on there at the same time live, and he had some really wild background with vegetables. That was pretty cool. All right. Anyway, yeah. So I think that's a good way of looking at it. ZZZ. Let's see. Where else are we? I guess we could do, I do 5 hours a week on Dukascopy, a question and answer. And obviously there's so many good questions and good questions all the time. When you're dealing with money and trading and markets, there's always, there are no bad questions. They're just short ones or long answers. Short answers or long answers. That's all it comes down to. Yeah, but there are no wrong questions. They're all right questions no matter what. It's just depending on the answer defines the quality of the question. Sometimes good and bad. A good answer can be short too, just as much as a bad answer can be long. But there is no rule to that either. It doesn't measure up with the math that way. So, or maybe it does, and maybe I don't realize it. All right, who's next? Let's go over to. We're gonna go to New Zealand CAD because it kind of relates to the oil. Did anybody? Oh, wait a minute. Hey, Daniel, how you doing? Equities look ready to fly. Sounds like a song to me. Fly away, fly away. Wah, 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 wah. I don't know. Robin says silver looks like it's ready to fly. And I'm starting to believe that. You know what I mean? Robin spots it. He usually picks up that pattern. And he's been saying to me, silver looks like it wants to fly. And so we're really trying to put on some option positions over there because, I don't know. We're thinking silver might do something crazy like go up into the 20s. For the equities, the equities are firm. I really think that's the best way to describe them. I don't really think there's bull and bear markets anymore in the equity markets. I think there's just lows and highs. The days of, bull markets that go on or bear markets that go on for months upon months. I think everything is just firm. It goes up or it goes down. The days of like, X amount of time down, certain percentage away from its highs defines bear market. It's comfortable to be short. It isn't. That's not safe anymore with the derivatives market, the options derivative market. That changed that whole concept in 1976. And so Doc is always on a rampage about that. I don't mean to be talking in the third person, but so yeah, I'd say the equities are going to be firm. Fly's a good one, I guess. But let's see. Lorentz symmetry that goes to infinity. Okay, I'm looking forward to that one. So let's see, where are we at now? Okay, yeah. So yeah, I would say that. Let's go over and take a look at. What we did. Let's not go to NASCAD for the moment. What we're going to do is, since you said that about the equity market, let's go to Euro AUD. It seems to be the inverse relationship to the stock market. So let's take a look at that real quick. There it is. There, Euro AUD. So obviously it should be down, and you can see it is kind of down. You see it there. Nathan's still on. Okay. Nathan Sieber, a good physicist. One time I was talking with him, and I said to him, that doesn't seem symmetrical. And he said, no, it's symmetrical. And then asked me another question from there. I don't understand it. If someone had told me, asked me a question like that, I would have been like, we're having tea. And it's like, I said, I don't, there's a symmetry missing in one of the lectures he was giving or something. And I was saying to him, it doesn't look, after the lecture, we were talking, having tea. And I was like, nah, it's not. Anyway, forget that. All right, so here's the euro and the AUD. And so you can see here, it's kind of rolling over. I guess you go like that. It looks like it's really rolling over there. And then you can go and take a look at the U.S. stock market. We'll put it up on here. Where are you, U.S. stock market? Let's do that one. There's the S&P. And you can see that. It's trying to move up. Just as this is trying to move down. You see this is moving up. This is trying to move down. So look at that. We got a red and green kicking out again. So sometimes that can be a very volatile sign. You can see like right here it went onto a little slope down. Where's the last one? There's one right there. It massively gapped up and ran like a mad animal for a bunch of days there. I call that flying also, Daniel. That'd be cool. And then you can see one here. It just did it for one day with a spike the next day and then backed off and then kept on its little merry way, I guess you could say. Same thing here. It was at the beginning of another nice trend. Right there is a good one too, with two of them right there, taking off like a bat out of hell. And so let's see. Hell, the S&Ps at that point was at 2,400. Jeez Louise. Let's go take a look at that. Where was that? That was April. Okay. And you can see in April, this thing was spiked in the opposite fashion, So this is a good pairs trade to kind of watch the inverse relationship to the stock market. Let's see. Daniel was considering taking it long here before the positive vaccine news and the ADP being revised 5 million higher. Yeah, I hear you. You know, I look. I have a pet peeve, I guess you could call it, or an opinion about it all, and I say this all the time. We are in a equity inflation era, so equities are having a heavy inflation. Okay, so in other words, they're much more expensive than they would normally be because of inventory, the lack of companies making profits and actually existing. So I've said this to Robin. I've said this into the webinar. The Wilshire 5000 stock index. It was created back in the late 80s or mid 80s, I guess it was, for the go-go era of the explosion of the equity markets. Where it tripled in value over like a 3-4 year period. Oh, 5 minute break. Okay, we have a 15-minute break, so that's cool. All right, um, so basically, we have equity inflation going on. You have 15, 16 trillion in equity parked in negative return. Just literally not making money. People, funds don't like that. They don't keep their jobs long if you keep on losing money. So, you know, the analogy that they're going to fly is kind of legit in some way because they're just dying to go up in value because there's nothing left. Now, when I started rambling about the Wilshire 5000, that was 5,000 different companies, 5,000 different stocks. Now that index has only like 3,800 companies in it. They've lost 1,200 companies through takeover and mergers and things like that. And so they don't change the name of the index. They just don't have enough companies to put in there. So it only has like 3,800 companies in it now. And I think that's a perfect example of equity inflation that we have going on. The money is looking for a return in investment, looking to make money to make money, and so there are companies that are trading at very strange, expensive values relative to many decades ago, but not relative to other stocks. So good old Albert Einstein slides in there with his relativity thing. So it's relative to other equities. So in North America, like the S&P 500, over about 50% of the stocks in the S&P 500 that we're looking at right now on the ES 500 is domestic in the United States, and the other 50% are foreign corporations, foreign incorporated, and they're foreign companies. And so there's a starvation out there that 50% of the top cap weighted stocks in the world are in the United States. And when we're only like, I don't know, 12% of the geography, there's 350 million of us or 60 million of us here in the United States, and there's 8 billion people on the planet. So, I mean, you would think that we'd only be, if apples to apples, everything around was apples, it would match up better like that, I guess you could say. Does any of that make any sense? Between me watching string theory and talking about this at the same time. Okay, thank you for taking my question. I'm not done yet though. Still have more, maybe for another day. Hey, ZZ, you're welcome to stop in and say hi anytime you want. We're just happy the fact that you just said hi. The rest of that is ice cream and on top of the cake with a cherry, as far as I'm concerned, that you actually asked them questions, and that's really cool because it makes me happy. I like exploring new ideas, and I'll leave you with this. Before the exchanges all basically disappeared, us traders on the exchange side had a place to go and push ideas and talk ideas and ask questions and say statements, good ones and bad ones. And we were reactive. Orders came to our exchanges, and we were able to trade off of those like knife through butter. Nowadays, we're in a proactive state. We're all outside of the exchanges and universe. There are no, people are not knocking on the front door asking you to buy euros, or someone says they want to buy some British pounds or they want to buy some bonds off of me. No one cares. No one's knocking on the door. So this is the cyber pit. We're in a cyber exchange, as far as I'm concerned, exchange of ideas. And so any question is a good question, as far as I'm concerned. And because you don't know where it's going to lead to. I mean, we've discovered some good trades out of this just in the last 2 weeks because people ask questions. And that's what it's all about. So ZZ, welcome to the hood. Welcome to the neighborhood. All right. What's next here? And I think I answered Daniel, didn't I? Yeah. Yeah. So, yeah, I think that price inflation is making the stocks fly because there's nowhere else to go. There just isn't anywhere else to go. And when you have close to 15 trillion, if not more, in minus returns, in other words, 15 trillion $15 trillion are invested in minus investments. Not billions, not millions, trillions. And that alone generates an inflation, a natural value inflation. It's a relative thing. You know, I mean, it really is. You can't invest like it's 1970. You got to invest like it's 2020. And that means utilizing the derivatives. You have to utilize the derivatives in a responsible way. What I mean by responsible, meaning that you're not doubling and tripling your short position or your long position without protecting it on some level. Remember, it's not a zero-sum factor anymore. There's not 5 players at the table. There's 5 billion players at the table. 8 billion players at the table. So, all right. Let's see. Zero-sum game is over with. All right, so there's that, the Euro AUD. Now let's drift over to, we were going to look at the NASCAD. That's kind of a relationship to the oil market, which I saw the headline yesterday. It's like they made it sound like oil was going through the roof. I went over and quickly looked at it after markets were closed. And the headline, they said, oh, my God, the biggest drawdown in, so long ago. Let me see if I can find that headline and put it up on the screen there really quick. I was like, are you kidding me? Are you kidding me? Let's see. I know where to find it. I have it parked. And it was like, I said oil was up 40 cents. That was it. I'm thinking it was up like $4, the way the headlines were screaming. Like, oh, my God, biggest drawdown in X amount of time. And it was like, oh, I'm thinking, oh, my God, that's got to be cool. They must be running that puppy. And, blowing through the 41. And I'm not even expecting that to happen. And, it was nothing. Let's see, where's it at? Almost got it. I have it bookmarked here somewhere. I'll find it in a sec. Let's see. And no, we'll find it. And we're going to put it up there. And the sensationalism of the headline itself. And what do we have NASCAD. We have NASCAD there. That looks like a flat line for NASCAD, that's for sure. Let's see, where is it at? DOD now. Not there. Maybe I don't have it bookmarked. All right. So I'll have to just go here and see if I can find it. So, yeah, last night, the drawdown was really enormous. And it only sent up oil like 40 cents. I don't see the headline. Maybe I'll try to find it later. Let's put oil in here. Let's see. There is the NASCAD. Let's take a look at oil now. Not there. Right there. It's a down candle. And just hanging around in that 40s. It seems like it filled the gap there, which, gap theory says, if you follow gap theory. And, you can see it's trying to bounce. But overall, it's doing not much, just like the way NASCAD is, just sideways, the same way. And these products usually follow each other very well. Now let's take a look at oil in our work. And let's see. Earl. Is it there? No. Yeah, there it is. There's the Earl. You can see we've been a weekly buy all the way back in the 20s. And looks very happy up in here. We went to a daily buy a couple days ago. Insiders always know. You can see the red and green, but it's not really going anywhere from it. Just keeps on bouncing around. Matter of fact, now it looks like it's on the lows of the day, really, like 39.05. Huh. So, this is July, though. I'm not looking at. No, I'm sorry. Is this? What is this? This is. I think it's. This is not. This is August. I think this is August oil I'm looking at, not July. Am I right here? Maybe I'm wrong. Maybe it's the other way around. Because Dukascopy is usually accurate too. So, how is that and this one's not? Let me just. Oh yeah. See, that's. Yeah, that's August. So that's what that is. That's August. Let's see. Let's see. Daniel says. Let's see. It's very hard to find a currency that doesn't correlate with equities. I agree. All dollar, yens, and Australian dollar currencies move accordingly to the S&P almost always. Again, I have to say that I would, think that has to do with the fact that there's a asset problem. No, there's not enough assets in the world, so the boat is the same size, and everybody's trying to get in it. And so, money is looking for places to go to get returns. Like Australia is usually, is a much higher interest rate than the United States. Same token, Europe, it's a minus. So, you would think that people would be buying Aussies and Aussie dollars and investing in Australia. Same thing with the States, buying dollars and investing in the States. And then obviously Europe, because of its action, is that's 80. That's not 00. So that makes sense now. Okay, that makes more sense. Yeah. Okay, that makes more sense. So I was going to say, Dukascopy is always accurate. So how could it be off that much? I'm not sure. What is up with that thing? Why does it say 05? When I'm looking at it, let's do a Control R on that. No, that's not the one. Right there. Let's do a Control R. Oh, 05. Oh, let's see. Q is August, yeah. And this is probably July. Yeah, that's probably what's going on. And so Dukascopy is following the July contract. Now July expired, so it can't be July. Maybe it's September? I don't know. We'll have to check that out. Let me just look one other place. Yeah, September. It's September. That's what Dukascopy has. September up there. That's what it is. And I have August. That's what's going on there. That's why the prices are different. So yeah, I agree. It's kind of like following the breadcrumbs. It's when you see the currencies move like that. And I guess what's that say about the euro? I mean, if 54 was here, 54 is definitely always on top of that, where the euro is just way over or underpriced. His concern, he thinks it's way overpriced, and it probably is. So it's very geometric engineering in M theory. Now that sounds like something I can put my teeth into. Hot damn. That starts in a few minutes. All right. Anyway, this is Doc from, where am I from? Southern New Jersey. All right. And we will catch you guys tomorrow. Same time, same channel. Tomorrow is the Friday of the United States because Friday we are closed. I'll be here for questions and answers. But, the markets will be much slower on Friday. So traders, be careful. Don't get locked into something, because it's going to be a dead Friday. All right. How do we end this? Oh, yes. Happy trails to you until we meet again.